Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. A really pretty tumultuous week for global equity markets. In the US, the market went from near record highs to a correction territory in less than 5 days. Now, obviously, this is all sparked from the coronavirus, COVID-19, and really the impact it's going to have on the global economy. Now, as yet, the global impact really is unclear. Obviously, there's been pretty major shutdowns in China, and really concerns over the sort of supply chain. But gradually, the sort of Chinese factories are getting back on track and getting back to work. Maybe only sort of at 30-40% capacity at present, but that is sort of increasing almost by the day. But certainly most of the major companies have come out now and sort of given a little bit of a guidance and sort of a warning for sort of first quarter sort of earnings and profits. It's just going to be very interesting to see how they sort of plan through. Certainly some of the airlines, really in extreme case, British Airways, have come out and really said they just do not know what their earnings will be for the first quarter of this year. So on the back of that, the Fed have come out and cut interest rates by 50 basis points this morning. But that really didn't quite have the effect that they were looking for. On Monday, US time, the Dow was up around just over 1,000 points. But after the Fed rate cut this morning of 50 basis points, the Dow Jones currently is trading down around 600 points. But maybe that's more to do really with the 10-year rate now. That is approaching a 1% yield in the US. So it's a 1% yield on the 10-year interest rate in the US. Now, obviously, that has some pretty major implications out there for global interest rates, and it's just going to be very interesting to see sort of how the rest of the central banks follow suit. Certainly there is a feeling there will be a concerted sort of interest rate cut and concerted sort of aid package coming to the global economy. The interesting point on that is obviously with in Europe, certainly interest rates in many countries are already at zero or negative. So, do they go more negative? And if they do, does that really help the economy? Interesting, after the rate cut this morning, President Trump has been on the tapes and Twitter sort of demanding more rate cuts and really, having a bit of a rant and rave again. But, you can really argue, and many sort of economists have sort of come to this conclusion now that, given interest rates now are targeting 1 to 1.25% in the US on the Fed funds rate, cutting interest rates further really has a very limited impact. What you really need is sort of fiscal help from the government in terms of sort of spending, infrastructure spending, maybe tax cuts, something like that. But all the time as well, you've got to remember currently, sort of COVID-19, although obviously it is a major sort of issue. Certainly the mortality rate is really still pretty low, just over 3,000 deaths globally. And in terms of infections, sort of 85% are mainland China, and most of those are in the sort of Hubei area where the disease sort of originated from. Although it is quite interesting, one of the major US investment banks has come out with a paper that they sort of predict the Chinese growth for the second half of this year will be closer to between 15 to 20%. Now, obviously, running in tandem with COVID-19 in the US is the presidential elections as well, and sort of campaigning. Super Tuesday today, that's going to be very interesting to see how that sort of plays through, especially given the events over the last sort of week. Joe Biden came back strongly in South Carolina. Pete Buttigieg has pulled out of the race. So currently for Super Tuesday, it looks like sort of head-to-head between Biden and Bernie Sanders, with potentially Michael Bloomberg as a bit of a sort of dark horse. If he can gain a bit of momentum on Super Tuesday, then it could be quite interesting going into the Democratic convention. But potentially for the Democrats, that's probably a nightmare scenario where you've got sort of three front runners out there and they've got to sort of battle it out at the convention to see who gets the nomination. On the back of global slowdown, obviously oil has taken a bit of a hit. That's well below $50 now. But will that give a little bit of sort of easing of pain at the pumps for gasoline prices around the world? It'd be very interesting to see. Because potentially that plays into the hands then of sort of further low inflation and central banks not meeting their inflation targets, which then leads to potentially further easing of interest rates to try and stimulate growth and a bit of inflation as well. In the UK, PM Johnson and President Trump apparently have come to a pretty major sort of trade deal. Again, details a little bit sketchy, as you would expect from both of these characters. But the headlines are saying great deal. But just be interesting to see really what it sort of comes to fruition. And again, all the time as well, the UK is still trying to negotiate a trade deal with the EU, and that's going to be very interesting as well, because certainly the EU appears to have the sort of upper hand in terms of negotiations. A little bit closer to home, and the Australian housing market still pretty buoyant. Obviously being helped by low interest rates, and we talked that the RBA will cut interest rates further. That really is just going to give a little bit more sort of support to that housing market, which again sort of helps sort of consumer confidence, and maybe should just push the economy along a little bit a further rate. Certainly at present, cases of COVID-19 in Australia are relatively light, and it's just going to be interesting to see sort of how it does sort of develop over the next sort of 3 to 4 weeks. Here in New Zealand, one of the major banks is sort of predicting a 50 basis point cut in the interest rate as well, the OCR. That will take it down to 0.5%, and then a further 0.25 cut later in the year. Now, if that is the case, you'd see an OCR at 0.25 for New Zealand. Now, obviously, that'll have some pretty major implications out there, especially for term deposit rates, but also as well, obviously, for mortgage rates, the housing market, which is already, sort of picking up ahead of steam, and really sort of pushed on quite dramatically in the last sort of 3 to 4 months. A few changes been announced to KiwiSaver as well on the default schemes. You no longer, if you default into a scheme, you no longer go into a conservative, it will go into a balanced fund. That obviously has potentially higher returns, but also as well potentially a little bit more risk associated as well. And that again will be very interesting to see how that sort of plays through, especially if we do have a bit of a downturn in the markets. With KiwiSaver's investors going into what they thought was a relative sort of low risk fund, and all of a sudden their balance after 1 or 2 years is a little bit lower than they first anticipated. Now, if that is the case, obviously the government might face a little bit of criticism on that issue of putting them into a potentially a sort of a high risk fund. Okay, returns might be slightly better as well. Another major change has been investments into fossil fuels. That has now been banned from default providers. But also as well, obviously with this market volatility, KiwiSaver is a long-term investment. It's talking about retirement. So, if you're sort of, early 30s, you're not going to access those funds for at least 35 years, maybe 37, 40 odd years. In the bigger picture, it's really time in the market, really, rather than sort of trying to chop and change and go to a sort of lower risk fund, just because there's a little bit of market volatility, as say, when you're not going to access those funds for maybe 30, 40 years. Obviously, the other major issue, apart from COVID-19 for New Zealand and the impact on the economy, is obviously going to be the sort of drought. There is a little bit of rain coming through in the next sort of week or so, but really not enough to sort of change too much out there. We need a prolonged period of rain to sort of end this drought. Because certainly farmers are doing it pretty tough out there, and again, it's just going to be interesting to see how that sort of impacts the sort of dairy sector, especially with COVID-19 as well, and potentially sort of slow down in China. So certainly with lower interest rates, it is getting pretty tough out there for investors who are looking for income options. Certainly term deposit rates, are pretty low. And if you are looking for alternatives, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.